Yep.
Just to introduce myself quickly, my name is Cindy Crowley. I'm with SEK, which is the public accounting firm here in Carlisle. Been with them since 2016. I've been in the public accounting for 30+ years. I say 30+ because I usually mess up my age and my husband will correct me, and so I just get it 30+. SEK has about 6 offices, one in Hagerstown, and then we go over your Chambersburg.
Can you come this way and talk up just a little bit more? Thank you. Yeah, don't be shy.
Okay, I can talk about that.
There we go. That's perfect.
So most realtors, they have a Schedule C. And a lot of times I have found anybody that has a Schedule C, really, they don't pay attention to the Schedule C. They give the information to the accountant, or they fill out their Schedule C, but not paying attention. So that's why I included in the packet a Schedule C. So if you're filing a Schedule C, you should be aware of what it looks like, because that is where your expenses and your income's reported. Schedule C means your sole proprietor. A lot of questions, and I put this first because in some of my discussions, I put the entities last in the discussion. I have switched it up because that seems to be where most of the discussions have taken place. So if you are self-employed, just you haven't formed anything, you're a sole proprietor. You have a Schedule C. And I have to preface this by, you do need to talk to an attorney about liability purposes. But the next step up for liability purposes would be an LLC, which is a limited liability. It is a company and not a corporation. They can be single member or they can be multi-member. If you're a single member, you actually do Schedule C. So you're doing the same form you would as a sole proprietor. You get a step up in liability protection. And there's other perks to that type of entity. The next one would just be a partnership. You're not forming any kind of LLC. You're just creating a partnership, having a partnership agreement, filing a partnership return, which is the same return as a multi-member LLC would file. No tax benefits to any of those. It's mostly liability and different purposes for them outside of tax. The next step would be a corporation. You don't see many regular corporations anymore. Across the board. You just don't. For a realtor, that would not be the entity for a realtor to select. But you can be a corporation and select S corporation status. This is something that it's been you've been able to do it for many years, but you hear now and again it comes in cycles as to, hey, you need to change to an S corp. Why you hear that is because of self-employment. It helps you with self-employment tax, but you have some restrictions that you don't have as a regular LLC or sole proprietor. And we can get into those restrictions if you're interested. What?
I said, yes, please.
Okay.
They're asking if you can go up,
Go
speak up.
more? Okay.
Yeah, it's very hard to hear you at home. Sorry.
Okay, I'm sorry about that. So as a corporation, you would form as a corporation, then select S corp status. It's an election you make. You usually make it by March 15th of the year you want to change, or you want to elect that. You can do that with an LLC, a single member LLC or a multi-member. You can elect S corp status. That is a tax election only. Does not change anything for your entity except for your taxes. As a sole proprietor, your Schedule C, as a single member LLC with no election, your bottom line is tax itself, employment tax. So you're paying that 15.3% times 9.35%. of self-employment tax on that bottom line. So when you're looking at your tax return and your tax return taxes are jumping, because income, so your tax bracket is jumping. And you're also paying self-employment tax on that higher income. So your tax bill will jump more than somebody that doesn't have a self-employment tax. It just. What happens is when somebody's a sole proprietor and they start screaming that their taxes are so high, it's usually the time to sit down and say, let's look at the S corp. So either if they're a sole proprietor, you have to switch to either an LLC, elect S corp, or create a corporation and select S corp status. What that does is you need to take payroll. An LLC, and one of the questions I had was about an LLC and payroll. If you are a single member LLC or multi-member, which most realtors are a single member LLCs, you cannot take payroll out of a straight LLC. You are basically a partner. The bottom line is taxed with self-employment tax. If you're an S corp, you need to take a payroll check. That means you're also going to have payroll taxes. So it would be just as if you're working someplace else, the company pays half of the FICA, you pay half of the FICA. So you go through all the payroll taxes that you normally would in any other company. But if you take a reasonable salary, and the IRS actually uses the word reasonable, it's what somebody else would get paid for what you do. The bottom line is not subject to self-employment tax. So as your income increases, the S corp is a better option. If you're making a net income of 50,000, it probably would not benefit you. But as you're getting up to 80, 90,000, it's what you want to start looking at. Because you start saving that self-employment tax. Now that also means your Social Security wages are going to be lower if you're thinking about Social Security down the road. Don't know where that's going to go down the road. So, you know, that's a question mark. But that is a benefit of the S corp. The S corp has its own return, which means you have the cost of that return. And you have to operate as your own business. If you're a sole proprietor, you're probably not keeping your records separate from, personal.
No,
But if you have an LLC or an S corp, and the LLC would be either an S corp election or not, you need to keep records separate. You have to. And you're doing that for two reasons. One, for tax reasons, but also by electing one of those companies, you're saying, this is the business here, this is me. And that is what gives you the liability protection. So if something were to go wrong, it's the business that would get in trouble and not your personal assets. So you want to keep different accounts, different credit cards. You know, you have an accounting system usually, and you're going to those groups. Does that make sense? So I probably starting about 15 years ago was the first time I ever had a realtor. I walked a realtor through an S corp election. I've done many other businesses, and it's usually a win-win because you're staying in that self-employment tax. You want to make sure that your income is going to maintain or go up to make it worth it. If you start having losses, that's not the election for you.
Cindy, as an S corp, I pay, the corporation pays that half of that self-employment tax, right?
Through payroll
Through
taxes,
payroll
yes,
tax. And
only on your payroll.
right. And then I pay as a person, pay the other half of that.
correct.
So it still equals the same amount of money.
But it-
50.3.
It does, but it doesn't, because you're only paying that on your payroll.
Right, not paying it on everything.
Right.
So that was the big advantage of why we switched mine over to S corp. Because my income was starting to exceed that number. And it just made sense to do that. And the other benefit I talked with our agents about the other day is as a commissioned real estate agent. Banks, when you go to finance, whatever, they sort of frown on commissioned salespeople because it's not consistent income, whereas with an S corporation. You can pay yourself a consistent paycheck, which I've done since 2002, and have never had that problem, so I still work for that corporation, so there's some benefits from a lending perspective as well,
Right.
to have an S corp set up.
They will ask for your S corp return and your personal return, but.
Right.
So on, an S corp return, it's called a pass-through entity. So while there's a return sitting there reporting all the income and all the expenses. The shareholder or member, depending, they receive a K-1 for their activity. That is what gets reported on the individual return. So it passes through to your individual return. But it keeps the business as being its own business and not part of your personal asset. Not that you're subject to a lot of liability, but it does protect you. It protects, something were to happen to you personally, that is a business, that is separate from personal too. So it kind of goes both ways. Any questions on entities? You can select the status at any point. It's usually best to select for the beginning of the year. There are cases where if you meant to make the election and you didn't by the March 15th of the year. So if you want to become an S corp next year, you have to select it by March of 2023. If you don't, there is a back end way of doing it as long as you are, if you start your payroll and pay yourself. You meant to do an S corp, you're treating yourself as an S corp, you can now do it on the tail end of the year. The IRS has determined that, hey, and why they're doing this, it's kind of funny because it's not for their benefit, but they're saying, hey, if you made a mistake, we want you to easily fix it by the end of the year instead of creating a lot of expenses.
I could not pay myself now. That's a mess
But it's something to,
for the next year.
yeah, so you want to look at your income. Yeah, you want to look at your income and see if it's worth it. And we can run calculations to say, this is where you should probably consider it. Usually it's around 80 to 90,000 is where you want to start looking at it to say,
As a gross income.
as net income,
Okay.
yeah. Net income. And as long as you perceive your income is going to stay positive. When you start having losses, the S corp doesn't help you. Actually, it becomes a hindrance.
What do you mean losses? Lower than,
If your income is less than your expenses and you start having losses. So if 1 year, if it only happens 1 year, you have some large expense you had to pay out. And you had a loss, 1 year's fine. But the S corp, the benefits of the S corp works when you have a greater net income.
You had mentioned liability, separating business and personal. So a lot of real estate agents may have their face on the side of their vehicle or their, I'm a realtor and they get into a car accident. This may be a legal question. If you have an LLC or S corporation, you're insulated. It's a business accident, it's not a personal accident. So Is that more of an attorney question, or can you speak to that?
That is more of an attorney question. It would first go to who owns the car. Which is a whole other tax,
Mhm.
So your business might not have bought the car, you bought it, you
right?
just put your sign on the side of it. So it's coming after both of you.
Well, it's not even necessarily,
If you're out running clients or showing houses and stuff. You get in the backseat,
that could blur some.
we'll call it.
Quick question with the car thing. I've read that, I can buy a car personally and then have my LLC renting it from me, like leasing it from me, and that will do some tax benefits. Is that true? Or, and if so, how does it work?
So,
Or, because in my mind, it's like, okay, the LLC will pay me for leasing the car, but that will be an income on my side, so I still have to pay taxes for that.
if you're actually renting, that is because it's not real estate. You're creating a whole other tax transaction.
Okay.
So we'll jump to vehicles. This is what, I mean, we're jumping around. So we're talking about vehicles. If you have a sole proprietor, you own the vehicle, it's not in any other name. So there's two ways to take the deduction of the vehicle, which is for most of the different levels. So you either take cents per mile, which this year they changed last year. So either you need to know how many miles you traveled through June 30th, and then how many miles through the end, or a lot of people are. If you know the last half of the year is greater than the first, then you should adjust. But, so there's two different mileage rates for this year. So you can give yourself the mileage rate. That is the easiest, the straightest thing to do. Doesn't create any kind of issues, no income to yourself. You're just reimbursing for the miles. You should have some kind of log, which most realtors, they keep track of, they have their calendars. You should keep track of your mileage. At one time, the IRS said, well, you can take 3 months of the year and estimate. They're getting away from that. Pennsylvania wants actual mileage. If they were questioning your mileage, they would ask for your logs. The IRS has stated that if you don't have a log when you do your return, you don't have a log, so they can deny the deduction. But most realtors have a calendar that has where they've gone, and you've kept that calendar. That is enough to prove that you have a log, that you can create a log off of that. So there has been a ruling stating that because you had a calendar, but even though you don't have the mileage written down, you can still create it after the fact. Because I know a lot of people will go back to their calendars and create their log for the year, end of the year. So mileage is an easy way to reimburse to take it on the return.
Mhm.
If you're an S corp, you're taking mileage, you'd reimburse yourself for that mileage. You can actually write yourself out a check, keep it in the company, doesn't matter, but you get that deduction for the mileage. And it adds up. That's a big one, because you travel, you're in and out of your car all the time. So keeping track of where you're going is another thing. It's not just your showing, it's but you have to determine where your home office is. And that's a whole other issue. Your mileage is from the home office. So if your home office is here, if you have an office here, you have a desk that you work at, then you do not take mileage from your house to here. If you don't have a desk anyplace but home, then that is where your mileage starts from, is when you leave the door there. So the first step is to determine where your home office is. And I did include a sheet as to when to take mileage. It's the little diagram about when you can take mileage. So besides mileage, then there is taken actual expenses. You have one or the other, and once you decide it on a vehicle, you cannot change it. If you take actual expenses, it's depreciation. It is insurance, gas, repairs, maintenance. Oil, I mean, your typical expenses for that. Does not include interest. If you have a loan on your vehicle, you can take the interest. If you're using it for business and personal, you have your mileage, then you can determine how much of that interest is business, how much is personal. And you take the business portion. So interest is actually a separate deduction, does not go with the actual on the line where the car expenses go. If you have parking and tolls, that's also a different line, that's 10% deduction. One of the mistakes I've seen is adding up parking and tolls with repairs, maintenance, and gas, if you're taking actual expenses, because all the basic expenses is prorated according to your business. So if your mileage comes up that you're using it 80% for business, those basic expenses, the insurance and everything is taken 80%. You want parking, tolls, and interest taken differently, and interest that has its own block, so it's a percentage too. You do have the what's called bonus depreciation on the vehicle or section 179. It is limited for a luxury vehicle.
Over 6,000 pounds.
Well, no, so a luxury vehicle is under 6,000 gross vehicle weight. And basically a luxury vehicle is anything that costs more than $15,000. Some of the numbers I have in here, the IRS hasn't updated as long as I remember, so, yeah. There's section 179, if you own a vehicle, there's some maxes on that. The problem and why most people don't take actual expenses on a vehicle is one, usually you are by mileage, and you have personal use. If there is a year that your personal use is greater than 50%, you have a problem on your tax return. And you're not going to be happy because you're recapturing depreciation that shouldn't have been taken in the past. I have warned people on this, and one year, somebody got really ill. 1 year COVID hit, and all of a sudden, all this income was put on a return. And it's ugly. It's really ugly for 1 year. So you have to know that you're not going to go below 50%. Whether you need to drag yourself out and drive to the 50%, but you cannot fall below 50%. That's the biggest issue with taking actual expenses with the vehicle.
So once I elect the actual expenses, I have to stick with it.
Yes,
Okay.
when you get another vehicle, you can decide on that.
Okay.
So it's just when you get, you put a new one on the books, that's when. But you do have to stick with what you pick.
Takes mileage on more than one vehicle, use business use.
Yes. So if your vehicle broke down and you're using your wife's for a couple of weeks, that mileage that you use. can pay. So. Let's see. If you have an LLC or an S corp, the vehicle has to be in the company name to take actual expenses. It cannot be in personal name. So that's why a lot of people, insurance is higher when it's in a company name. That's why a lot of business will take mileage rates if the vehicle is not in the business. They don't want to put it in. And if you have a vehicle in your personal name and you want to put it in the company name, you will pay sales tax on it because it is actually changing owners.
Mm.
Yeah.
So,
And when you sell it, the proceeds go to the business, not to you personally.
So when you sell it, you're gonna have gain too, because you've already depreciated it. Mileage rate is your personal vehicle. There's no reporting of the sale. Keeps it clean.
So I give Cindy my mileage. I have a app, you may have heard me mention before, it's called Mile IQ. On my phone, I swipe left or right for business, left for personal. And if I'm driving my wife's car, I change that. And then here I just give her an Excel spreadsheet and it has from where to where, time, miles. And she don't have to go through my little booklet to figure out how many miles we work. It's such a simple, I email to her and it's a great thing for her because it saves her on the work as well. It's like $60, $5 a month what it costs.
No.
Yeah, very low cost.
and you can deduct it.
Yes,
Yes.
you can deduct the cost of an app. Yes.
Which I do.
Because you are getting that app for business, even though you are reporting personal use, it's for business. So that is an expense for business.
But it helps prove to the government that, yes, I use this vehicle for business, but I also use it for personal, and bring my personal miles. Swipe left or right, just keeps track of everything.
Speaking of proof, do I need to have a receipt for everything, or do bank statements or credit card statements, due diligence, for example, lunch appointments? Do I have to keep every single receipt, or?
You are supposed to keep your
Okay.
receipts
Mhm.
for at least 3 years.
I have a quick question.
Mhm.
For mileage, do I have to state what I was doing?
No.
What I've been doing? Oh,
You don't have to. A lot of them will say it's good to have some kind of description as to at least where you're going.
yeah, I just have like name of the location.
That would be fine, as long as they have not determined what the law needs to have in it. It needs to have the mileage, the date.
What if I'm going out to dinner with another couple? And I'm talking about business, can I write that?
So what was the intention of the meeting? Is it business?
It is to take another couple out to dinner. To thank them for their support of my business.
So if it's for business, that is a deduction. If you're talking business,
Yes,
The whole thing?
the whole thing, no, you don't have to have the whole meeting. It's the intention of the meeting.
No, I'm sorry, I wasn't clear. I'm sorry, I wasn't clear. Just the whole, like, let's say the receipt. Now, let's say there's I have a similar situation, had a good year, it was business. Thank you very much. We talked about it. We shared a bottle of wine, like the whole receipt. Can the whole receipt be deducted, or is there only a portion of that that can be
As
deducted?
long as the intention was a business meeting.
Okay. Thank you.
It's
And what-
travel where you have,
and dinner I'm talking about,
they,
like you went out 20 times. And had meetings. No? Yes, I did.
as long as you have it listed on the receipt, why you had the meeting.
Right, that's easy. It's because you have your calendar as well. Business meeting with.
Now, if you're going out every Friday night with the same couple,
Just put different.
I don't
names
like
on it.
someone.
I want you to be real clear with Christie about receipts.
so,
I'm so much better this year, wait till we meet.
so receipts. What the IRS wants is they want to see a receipt for every expense you have. As long as you can go online and get it in 3 years, you're okay that way. But they want a receipt. ask for any receipts. But, well, I should preface it, we'll not ask for any normal receipts unless you buy a fixed asset that we need to do something, but then at that point. But you should keep all receipts for at least 3 years.
Has anyone been audited and just had a heart attack and died on the spot?
Trying to avoid that.
That's what we're all here to avoid. I feel like I get anxiety just talking about it. Anybody else? Yes?
But I do know a story that. somebody shot.
Oh. You're in Carlisle?
Not in Colorado,
Okay.
Overall increases.
because they were being audited
Hmm.
and he was gonna be in trouble.
Yes.
Somebody there, no. No. Well, speaking of that, let me jump
Speaking of
to,
shooting yourself.
now, here's my. So you heard that there's more budget money going in to the IRS.
Yes.
So far, they have hired 4,000 customer service representatives. And they plan to hire 1,000 more. Only 10% of the 73 million calls to the IRS were answered during 2022. And I can attest to it, I got one phone call answered this year. Pennsylvania's even worse. Every time you can schedule a call with PA. Don't expect them to call you. So, they are horrible to get a hold of. They are trying to get customer service reps. They're trying, but they're also hiring auditors too.
I heard they hired 85,000 agents.
You know, that was their plan to hire. We don't know how many.
Actually,
Cindy, Tina has asked, what if you pay cash and you are not given a receipt? Can you write something on a piece of paper and state what it was for and the cost
Yes,
and the date?
date, sign it, what, yeah. Yep.
Okay.
I have not had that rejected.
Perfect. Thank you. Heather Kerstetter just asked just said, when I called in, I found my best luck was to call the moment the clock turned 7 a.m.
Yes and no. I have stayed till 7 o'clock what time I got through was 7 o'clock at night. On a Tuesday night. And I actually got through.
Wow.
And then, of course, I had a. wait on hold for about- got some fun. Big problem, but I did it through. But that was the only time I got through. And we have our own line of call. So what they also did was they have made robocalls illegal. It's not robocalls, it's what is it called? Yeah. So there is, you can subscribe to these services that will robocall the IRS when you get through. They have now made that illegal because then another.
So can we talk about this gift? So we can
Yes.
only purchase we can write off $25 of whatever we spend.
So this is the law, how it's been for as long as I can remember. They have not increased it. This was way back when companies used to buy employee service.
But they haven't increased it.
This is how it's written, and that's why I included it in here.
Mhm.
Now, it does not include to complete monogram or, engraving fees or whatever, things like that. Do not get this gift mixed up with your marketing materials. So if you have umbrellas that you have your names on it, you have some other things, that is marketing material.
So if you put a card on the gift with your, with your initials. So how, $25,
That's how the law is written. Yes, they have not increased it.
So
I have not had that question. That I included it because that's what it's written, so you should be aware of that. Now, that would be different than a meeting. You're not really gifting food when you have a meeting at a lunch. And for 2022, it ends at the end of this year. Any restaurant meals are 100% deductible. That was for 2021 and 2022. It is going away back to 50% for 2023. So you're aware of that. They were trying to encourage, it's been 50% for years. They were trying to encourage people to go out to restaurants because of COVID.
Okay, so there's lunches.
Yeah.
So if you have a settlement gift for a client, you buy them towels, candles,
Yeah.
it's $50. When you see my expense report, you're gonna cut it in half. Cause I spent 50,
I do not look at the detail.
you make me send you a general ledger, you don't want.
Well, but I don't, I'm not looking at, so gifts are, we include them as an advertising item. I don't like putting for gift.
I heard it as a gift.
Yeah. And that's fine. You are thanking them and making them remember you for a future transaction, for the referrals and things like that. $25 isn't going to get you much. I'm not as worried about $25.
What about us as a corporation, like for, we buy gifts for our agents or for admins, birthdays, things like that, is it still the $25? Or would it be better to do it a different way? Because-
Depends if it's
But like
brand
Christmas,
swag,
right,
because then it's marketing.
right,
It's brand.
but like Christmas is coming,
Right.
I usually give me that.
Or gifts, it's advertising.
Is that,
If you get your. See, that is why the umbrellas, the mugs, anything that has your logo on it would be advertised. So that's advertising, not a gift.
well, actually,
Um,
with the admins, it gives them their paycheck as bonus, so that wouldn't qualify. But if we, birthday, for, you know, take the admins out for lunch, not time to go, we buy them a gift. Is that handled the same way for employees as it would be for a client?
So, and I don't see that under meals and entertainment, well, first off, entertainment. It's not really a deduction. They took that away starting in 2017. Entertainment, they see as you give tickets to somebody to a concert. A big one I saw was, a company bought seasonal football tickets in a year because they used them.
Yeah.
As thank yous. That is not a deduction.
Like with the Bears tickets?
Yeah.
No.
Don't even, you know,
Don't even
because
try
that
that.
is entertainment. You're not having a meeting. That is not.
No.
If it's, you know, you want to go, if you're taking somebody out to dinner and there's a band there, that's not a problem. But it's the entertainment portion is not a deduction.
No sporting events.
Sporting events is in a country club, we, you know, they haven't been deductible. So under meals and entertainment,
Which is now the meals.
So it says entertainment except for employee events like office parties, recreational, social, or similar activities, not just that. Things within your company that you are doing for, it would be your agents or employees,
Okay.
you can have.
I get it.
If you give a bonus and they're an employee, anything $25 or more, you can go up to 25 for a gift card. Don't give 26 because then that needs to be added to
Or
the
if we
table.
just bonus the. We just bonus the people, we just say it's a Christmas bonus.
So if you give a bonus of $100, that goes to the payroll.
Right, so
Yeah, unfortunately.
that's what we did.
Sorry, again, quick question about the gift. It says you deduct no more than $25 of the cost of business gifts, but I can give them something for $200? Or 150, I mean, it doesn't make sense tax wise, but. I'm
You
just
can.
asking about the, I can, or can,
Well, you can give them a gift, but if you're constantly giving $150 gift, you're not gonna be able to deduct over the 25.
got it.
Okay, so if somebody gives a $50 gift card, they can only deduct $25 of that. Right?
According to the current IRS law, are people doing more? Yes, because the law has not been updated for inflation. It has never been updated. I think it was $25 when I started. If it was a turkey or a ham, everybody always got it all. It was always way below. Everybody was happy and yeah.
What you're saying is agents.
I can tell you most people are going over $25. Now, what does that giving flowers because of an event? You could probably say that's different. If somebody passes away and you send flowers, that's not really, you're not gifting because somebody passed away. So that's for another reason.
Yeah.
So it's things like that would be posted to like office expense. So again, this is just the law according to the IRS right now.
So is there no limit on office expenses?
Office expenses is what you need to.
Hmm.
keep things going.
Enough, but then if I later gift them to somebody else.
You only have to present receipts. And
That's right.
Quickly, 1099s, if you pay for over $600 during the year. And they're not a corporation, being an S corp or corporation, you do need to file a 1099 for that. And they are due by January 31st. The IRS is really cracking down the 1099s. Realtors don't have that as much because you're usually buying something. You're buying marketing materials, you're not buying services. But say your personal, your business computer crashes, you pay somebody to fix it and you pay them more than 600, you are required to give them a 1099.
Okay,
You're
so-
aware of that.
Sorry, when I ask someone to show houses for me and I pay them, I give them the 1099.
That's a service. Yeah, so as soon as you hit $600, then you need their social security number or EIN, their name, address, and then the amount, and they are to be filed up in January.
So question, so we have a service through the office, we have a transaction coordinator and our agents are allowed to utilize him for a fee. That fee, they get paid that amount and then it is deducted off of their commissions through the brokerage. And then he is paid by us at the brokerage. Are they able, because it's deducted, they allocate the money coming to them, but then it's a deduction from the brokerage off of what they pay. Are they allowed to use that as a deduction?
Yeah, so they want to, so your income needs.
Your 1099 on the balance after the 100.
Okay.
On the balance.
Okay, so
So it's,
so your 1099
if.
after that payment comes off, not before, so no, it
Different than they collect a broker fee. Your 1099.
after the fact.
Correct.
Okay, so the answer
I
is
verified that.
you would not be able to use that as a deduction because it's not considered income that you're paying off of. Okay.
That's an internal. permit.
And then, so whoever pays it. needs to pay the 1099.
Right. Well, that money is actually transferring hands and being paid. So, they're being paid on its own, so.
That's not a problem. And if you pay rent. One of the areas I see the most trouble with is not keeping track of your income and expenses throughout the year. If you're not doing that, okay, if you're not doing that, you don't know where you are. You have no idea. And you're self-employed, which means you may have to pay quarterly estimates in. You have no idea what estimates to pay. If, if your income stays the same, fine, you can base it on the prior year. But I have so many people, not just realtors, coming into me. I stayed up till 3 a.m. working on these books. I don't feel bad because you should have been doing it throughout the year and then telling me where you are. So you don't have a surprise April 15th. You don't want to balance to April 15th that you are not aware of.
So how would I pay them throughout the year? That was my question. How can I pay some taxes? Not all of them, okay, but some.
So, you are required to pay estimates throughout the year if you have a balance due in your return.
Oh.
So you figure out what tax you'll be liable for,
Mhm.
basically divide it by 4 and pay it quarterly.
Mhm.
Now, quarterly for the IRS is a little different than quarterly for us. Quarterly for the IRS is April 15th, June 15th, September 15th, and January 15th. Quarterly estimates are not written in stone. That's why you want to keep track of your income and expenses so you can adjust it if need be. So your first quarter can be different than your second quarter. I did provide information on electronic paying of your estimates. I never used to say, hey, this is a good idea, because a lot of people want to pay by check with the voucher. There's been some issues. So electronic may be the way you want to look at it. For Pennsylvania, they are going to start requiring more and more of the estimates to be paid electronically. They're now through iPad. You get a record of what you're paying, which is great, because otherwise there's no, if you're staying in a check, yeah, you have your canceled check, but then when they don't have record of your payment because they posted someplace else, then we're sending in letters trying to find it. If it's electronic, you can see it right away. It's something to keep in mind. I think that's the way down the road we're going to be going. But, keeping track of your expenses can be as simple as Excel. You don't need an accounting software. As you get into maybe an LLC or especially S Corp, you probably want to go to books or something similar to keep track. Because they have different requirements. You have to really balance for an LLC or an S Corp. C Corp, you don't have to have something. Your accounts are already set. What I do recommend, another thing is people come in, well, here's most of my expenses, until I tell them, okay, this is your balance due. Oh, well, I need to go back, because at 2 a.m. they kind of miss something. If you use one credit card for your business, it's a lot easier to pick out your business expenses. If you pay cash, make sure you keep that receipt and put it someplace. Write on it what it is, because that receipt may or may not give you enough information to remind you what it is. But have one place, put your cash receipts. Checks are usually easy, what you're writing out for business, but the credit card is another one that if you're using several credit cards, or even just if you're using two, use one for personal, one for business. A lot easier. Contributions and donations. This is another area. A lot of people will say, okay, there was a golf tournament over here and I gave $50 to whatever, organization that's putting it on, and it's for a charity. So you're putting it as a contribution. Well, what are you getting out of it? Is it really a contribution, or is it advertising? Is your name going on a poll that people see, you and your business, that's advertising. You're getting that whole because you want people to see that. Your second goal was probably to donate. But you want that advertising. It's really advertising. The reason it's different is because advertising is deductible 100%. Contributions is not a business expense. It goes on your item of production. So it's really important to keep track of that. Now, if you give to the American Heart Association, you're sending it directly, you're not getting anything, that's a contribution. So that is added to contributions.
If you join social club just for prospecting reasons, you know, so that you get to meet people, hopefully get your name out there more. And can you deduct the cost of that social club?
What type of social club is it? A networking?
Savannah's.
That would be, I bet you some, an auditor would probably pick that up right away.
Oh, because that's where they hang out.
Oh,
Yeah.
well, no, they just, oh, sorry.
Do you see them up there?
I don't know, no.
Say like something like the Moose or anything like that, like you join so that you get to meet people, or like the Carlisle Women's Association, so I get to meet people and talk. I mean, I was just at a luncheon and somebody, and I started talking to somebody and I think they got my card and because they need help with.
So if it's a networking group, definitely. If it's the Moose, the Elks, or whatever, that is a social organization that would be entertainment, that would not, the dues themselves would not be. Because that is for you only, not for your business, it's for you. But if you go in and you have a meal and you're talking
And
to
I'm
someone,
talking
yes,
business.
then that,
Okay.
you know, the meal itself is different. The dues are for you,
Okay,
if that makes sense.
yeah.
But what you do with it makes the difference.
Christy, Mike Gross said that if you're using Savannah's as your social club, to remember to get a receipt from the dancer.
That's funny.
Why you remember that social group, if you advertise. Advertising.
Yeah. Okay.
If you get materials together to hand out or anything, you know, cost of everything. So it's what you do with it, the
Okay.
dues themselves would not be. Just remember health insurance, somebody, health insurance is a deduction. If you are on a group plan, say your spouse has a group plan and you're on that one, that's not self-employed health insurance. It's pre-tax. Now, if they would have not a pre-tax plan, and you know how much yours is, that's it. But keep in mind, health insurance deduction. Cell phone, that is a deduction, but you have to prorate it as to what's business and what's personal. That is one of the harder areas to figure out, but
What do most realtors say? How do they say?
I never answered that phone.
No,
call.
no.
Why you saying something?
it varies.
I don't 90%, honestly, just. do it. Oh, that's right. So they don't recall.
And I'll just go over these quickly. Retirement plan is always good to look at. If you want, you know, an actual retirement plan, look into them. There's a lot of different ones out there that can save you money instead of just putting it into a straight IRA. Some plans you need to have in place by October 1st. So those are options to look at. A retirement planner would be the best to talk to. I do have some of the basics about different retirement plans, but you really want a financial advisor to sit with you and determine what's best for you. Because depending one or the other, one may be better than the other.
Quick question, does a Roth IRA,
There's no deduction for a Roth IRA because it is after-tax monies, but not when you draw it out. and retire.
the decent justice that?
There's SEPs, single IRAs, solo 401ks. They all have different limits. Yeah. Home office is another area. If you don't have a desk someplace that you're renting the space, then
That's gonna work.
the home office can be good. A lot of people really fight for it and then realize it's not that big of a deduction. It'll save you $300 to $400 in tax. But some people just don't want to sit down and list all their utilities. There is a safe harbor you can take for federal, which means, and one of the problems with the home office is you need to designate what area is used exclusively for your business. It has to be exclusive. It cannot be 50% or anything like that. But it can just be a desk in a room and just that desk is, it does not have to be the whole room. Now, the smaller the area, the smaller the deduction. There is a safe harbor that you take $5 per square foot and the IRS won't question it. That then you don't have to take depreciation. And why depreciation can be a problem is if you're planning on moving or you have a house you've been in for a while and there's a big capital gain on it, you're gonna be paying tax on the gain of the portion of the house that was for business. And even though it may be a small portion, there's a big calculation to figure that out. So that is something to keep in mind. Some people just don't want to go through their utility bills for a year because it's utilities, which would be, you know, your water, sewer, electric, gas, oil, whatever you have, real estate taxes, mortgage interest, things like that. And then take them by the square footage. So that can sometimes be great if you have a larger area. Smaller areas, some people just say, you know what, I don't want to deal with it, and take the safe harbor, the $5 per square foot
That goes per year or per month?
per year.
Ah,
So
so when I pay rent and I have, because my office, one of my bedrooms is kind of big, I will then just go by, because that's what I did last.
Yeah.
And that was more than that.
So now it's $5 per square foot.
It still needs to be in this $5 per square foot, even though when I do the math, it's more.
It cannot be
It's greater than 1,500 per year.
It cannot be greater than 1,500.
Ah,
So when you did that, it should have kicked out.
sorry, I'm not this big.
So if you use, did you use the tax software? Like,
Yeah,
it shouldn't have allowed more than.
well, I said, this is my whatever before I looked somewhere else. So, but this, it was still approximately like I don't know, 20% of my entire square footage. So I took 20% of my rent, 20% of my utilities, whatever, deducted to dedicated to that.
Well, did you do actual expenses for safe harbor? There's-
Actual
Yeah.
expense.
Then you're fine.
Ah, okay.
Yeah, it's safe harbor cannot be greater than 1,500.
Ah, okay,
$5 per square foot up to 500 square feet.
okay.
That's the one that they won't question. The other one, because you rent, the
Mhm.
other one is great because you don't have to worry about depreciation.
Okay. So I keep on doing it.
You're fine. Yep, you're fine. Okay, there. One of the other questions was about depreciation, the bonus, and the section 179. If the IRS actually did something, back in, I forget what year it was. They said anything under $2,500, if you make the election, you can expense out. So you buy a printer for $500, you don't have to worry about it. Now, normally I wouldn't worry about $500 printer, It depends upon how many IRS agent you would get because of the definition of state. But now, anything under $2,500, you can expense out. So if you buy a brand new desk you're using for 3,000, you would need to, what's called capitalize it, put it on your depreciation schedule. But there's two ways to expense that out. One is now bonus, which is after 2022, it's being decreased each year. So this year is still 100%. That comes right off. It's expensed out. You're good to go. The next one is section 179, which has been around for years. The limit is, I think I had on here like $1 million something to begin with. That's another way to expense out. So there's two different ways you can expense out. Most people are doing bonus. It's what most software will automatically take. And the other option is you can section 179. It just means you're adding an asset, saying, yes, this is an asset, but I'm taking this election to expense it out. And you're making the IRS happy by acknowledging this was greater than $2,500. This is how I'm dealing with it.
Must it be expensed if it's under 20? Say it must be capitalized if it's over, must it be expensed if it's under?
Then you want to follow the policy you're adopting. So you're adopting a different policy. So you don't want to pick and choose.
Well, maybe not up to you, but so what I'm coding, so we just bought 2 new offices. I didn't tell you that, sorry. So we purchased a lot of assets. The big portion of it, but if we just bought new copies and papers for Hanover. Each one was, well, they were over 2,500, but we bought a sofa for how much? I don't know, say $600. I capitalized it as an asset, because I didn't realize it was up to 2,500 now.
Then we want to, so that was for a conversation to say,
We don't need the expense right now. We have a lot of expense.
okay, then we want to.
I think we've been capitalizing. Can you capitalize some but not others, or is there a great line if it's under 2,500, you got expense?
You can develop your own office policy. Follow. That anything over 1,000, you want to capitalize.
Right, and that's pretty much what I was doing before. I didn't realize it would change to 2,500, so just continue on that path.
You can continue on that path.
Okay, good.
So it's the 2,500 is an election, and most people will go with it because it's easier because you're not tracking the smaller stuff. I would advise not to track the smaller stuff just because then there's more on your schedule that you need to make sure you either have the bill. The schedule.
Right.
One of the areas is the depreciation schedule is now 3 pages long and has not been cleared out for years. And we have that. People don't want to deal with. You still have this asset from 1975. They probably do back in the store.
So if we, let's say you did capitalize it and you forgot to sold it, but telling you or dispose of it because something happens to it. And you're audited, I don't want to see that, possibly see those assets. You have to count the assets.
They will not worry about it. That's not too much of a big deal. They're emotional.
I remember in other companies I worked for, we had to account for assets, we had to tag them and account for everything, and it was disposed of, they had to be reported. I didn't know how.
So the larger companies, they want to keep track of where their assets are going.
For this preparation.
Yes, I will tell you, our office, every computer monitor has a sticker on it. And when something is done, they are, because they're trying to keep track of where all the equipment is. Now that's just for the computer system. You should keep your depreciation schedule, clear of old items that are not there. If you, which includes, if you sell something, that probably went into income instead of going into sale of assets.
Like, against the, push open the general ledger against that, fixtures, for example. So you and I will clean that up. Then.
So, yeah, so when I look at a balance sheet and look at fixed assets, I do look at the detail. That's one of the few accounts I look at the detail because I know if there's things in here I need to pick up. And if I see a negative, that's a question.
We should have to change the sale of assets.
Right.
Okay.
Or if you leave it as a negative, I will see it and say, okay, what to sell
Right.
and do a journal.
Okay.
So either way is fine. So if you sell an asset that's on your list, your depreciation listing, you need to report that as a sale because you have expense that it was large enough to go onto your asset listing. You need to report it as a sale. That on your Schedule C will actually not be reported on your Schedule C. That will go elsewhere. You do need to. One other thing I just want to mention briefly is if any of you have rentals personally and you're starting to have losses, check to see if you've ever taken, there's an election for a real estate professional. You want to look at that election before you actually have a loss from a rental that would get suspended. If your income's too high, you have a loss in a rental that gets suspended, that is an option. I'm finding a lot of realtors don't know that, and once a loss is suspended, you have to wait to sell that rent. Or if your income is usually once you have a suspended loss, it can be allowed. That is one option to look at. I think that we've covered all the areas that are usually brought up as being points to look at. Any questions? Anything I haven't covered that I answered?
Yeah, sorry, do you have any, or what's good, your average expenses to?
So the main rule of thumb is if there's something you're gonna buy in January and you know your income is higher than you want it to be, which means you need to report your income and expenses throughout the year so you know where you are, then you buy it in December instead of January or February.
I have a question for you. In October of 21, I purchased a home and moved into it like around December. In March of 22, my principal residence, I sold. So can I use go back into my 21 and my capital gains that I made on my house that I sold in 22? Say I use that money to buy my house in 21. You see what I'm saying? Can I roll it back by so many months instead of rolling it forward into a new purchase, the capital?
So
Gains.
principal residence, the
Right.
inclusion of the gain is different than what it used to be. It used to be you would defer it into a new house. You had to buy something equal to or greater than
What
get that
you gained
deferred
on.
gain. The gain exclusion for both federal and PA is for single person, a gain of 250,000, or for a couple is 500,000. That gain does not get reported on your return.
Okay,
Anything over that is reported and it's taxed
okay. And how often can you take that?
every 2 years.
Every 2
So it
years?
has to be your primary residence, at least 2 out of the 5.
So I don't have to worry about that, because I know
You
it used to be you would roll into, your gain into a new home. I didn't know if you could roll it back, so that's even a concern.
So you should not have had at least 250 to 500,000 on your return.
Yeah, I'm good on that.
Yeah.
unfortunately.
Which is really nice because that deferral was really ugly to calculate. and keep
Yeah,
track of.
I'm sure, wow, so, okay.
But to actually just say, no, we're not gonna tax this, it's free. It's that portion that when you have your home office and you're taking depreciation on it.
Yeah, I knew I was selling that, so I just did that $5 a square foot. I
Yeah.
was like, I am not depreciating and recapturing, worrying about that. And so, I have a lot of my paperwork on what, enough to cover it so that I didn't have that big of a thing, so, okay.
About saving on expenses, making sure you get all your mileage, but at year end, if you know you have expenses that you're gonna incur in January, pay them in December. Now, you cannot pay 3 months of rent and take it in the current year. There is a 30 to 60-day window that you can't bring forward expenses. You can purchase items though that you normally would not purchase until later.
But how about the Gahar or Realtor fees that we have, like $100 a year? I think I paid the 2022 fees in 2022. Now, if I would pay them in December instead of January, yeah.
That's a head timing issue, so yes, but you
Yeah,
gotta keep
but
in
it doesn't
mind,
matter.
because if you normally pay it in January, you're paying it in December.
Mhm.
That's fine, but keep in mind, next year, you're not gonna have that in
Yeah.
January, so you wanna make up the difference. Yeah.
But what I meant is, it doesn't matter if I have twice these fees deducted into the same tax. Okay.
You just can't, if it's really not up for renewal until like June and you're paying it now.
No, it's due until January 7th.
Were the questions that were on the list? Anything else?
This was really, really helpful. Thank you so much.
You're welcome.
We appreciate you.
And no more questions on,
Nothing new. Nope.
okay.
Thank you, Cindy, for coming out.
You are welcome. So much.
Yeah, that's good.